Okay, here is something that I often hear. I'm not sure if I should put this online, but the Federal Reserve has three primary tools at its disposal for conducting monetary policy. First, it can adjust the reserve requirement. The required ratio of funds of commercial banks and other depository institutions must hold in reserve against deposits. Second, the Fed can adjust the discount rate, the interest rate it charges commercial banks and other depository institutions to borrow reserves from a regional Federal Reserve bank. When a bank's reserves fall below the required level, it must borrow money from the Fed or some other source to avoid penalty. Thus, a higher discount rate will encourage banks to hold more reserves. Most of these reserves, however, are borrowed from the federal funds market. The Fed's discount window is a more expensive buffer against day-to-day fluctuation in reserves, demand, and supply. The Fed's most powerful tool for conducting monetary policy involves open market operations. This involves buying and selling United States government securities on the open market to alter reserves in the banking system. When the Fed buys a government security, it pays some private financial institution for the bond, so it adds to aggregate reserves by injecting new money into the financial system. Open market operations are powerful because every dollar the Fed uses to buy up bonds puts a dollar of new reserves into the banking system. Now, from there to supply-side economics. The three supply-side pillars follow from the premise on the question of tax policy. Supply-siders argue for low marginal tax rates. In regard to a lower marginal income tax, supply-siders believe that lower rates will induce workers to prefer work over leisure at the margin. In regard to lower capital gains tax rates, they believe that lower rates induce investors to deploy capital productively. At certain rates, the supplier side would even argue that the government would not lose total tax revenue because lower rates would be more than offset by a higher tax revenue base due to greater employment and productivity. On the question of regulatory policy, supply-siders tend to ally with traditional political conservatives, those who would prefer a smaller government and less intervention in the free market. This is logical because supply-siders, although they may acknowledge that government can temporarily help by making purchases, they do not think this induced demand can either rescue a recession or have a sustainable impact on growth. The third pillar, monetary policy, is especially controversial. By monetary policy, we're referring to the Federal Reserve's ability to increase or decrease the quantity of dollars in circulation, i.e. where more dollars means more purchases by consumers, thus creating liquidity. Keynesian tends to think that monetary policy is an important tool for tweaking the economy and dealing with business cycles, whereas the supply side does not think that monetary policy can create economic value. And that's my problem with it. I think in this type of thing with supply side, Republicans versus Democrats type thing, one favors the ability for a company to do right with it and thus take that money from a lower tax rate, and what they're supposed to do is reinvest it in the company so that they can hire more workers, and hire more workers, you get more families money by hiring more workers type thing, so that they can go spend in that type of sense. That's generally what's supposed to happen. The problem is, because you're not raising the demand for the product, you're raising the supply of the product. Now the problem is, on that type of thing, companies have to pay for new workers type thing and not just pocket the money, and when they're creating quote-unquote this bigger supply with free overtime or something like that. B, there has to be a demand, and here the demand part isn't so much one of the product, it's more or less the demand with the power to purchase the product. So if, even though if you make more widgets type thing, if your consumers don't have the money to buy it, and you're not paying the workers that are making more of the widgets for those consumers that can't afford to buy it, that's really not a win-win situation. That's my feeling on it. Thanks for listening. Some economics in 1D8 plus 1, the Leonor Wars. Have a great one.